spring has sprung, face. Let's have a great trading season, a season of growth in not only our accounts, but as traders. Time to blossom, time to make a decision to become a subscriber at ForexAnalytix. So a lot of things can happen in the spring. Looking forward to this equinox here and saying goodbye to winter. And here's a few things I'm looking at on our first day of spring. So Dina's asking me about crude. Was I looking for one more low? I was. I thought that we would break down under this level here. Not saying it can't happen, but you know, we could always go to 4.5 first, so that it looks kind of like this could have been A, B, C. Never got to 78.6. I don't recommend trading much until after the Fed. And the way I would trade it is here on the 1 hour. We're beginning to diverge, but I'd wait for closes back under 240, 235, 240 to do anything. I'd actually wait until after the Fed. So I have no positions. I'm flat. I think this is going to be an important Fed statement. I think it's Powell's first. So it's going to be interesting. In fact, when I think about it, and I saw a tweet by Bama, he's a great trader, a lot of great content, and he actually said that yesterday's down day was not so good for the Bears. And I'm trying to figure it out, and I tweeted him. And I believe his rationale is that we could get a dovish rate hike. You know, if the market had been going up into the decision, maybe Powell would have sounded more hawkish. But because we have some turmoil going on here outside of Fed policy with Facebook, politically, etc., that maybe what we get is some relief after the hike through his statement. So I would say, though, under yesterday's low in the S&Ps, we're on our way to take out the Fed low. There were a lot of different indices that held critical levels. Let me find that. IWM being one. I hope that helped you, Dina, with the crude here. See how we held this moving average? So we had a throw over in Russell, and we're holding right here. Under this low, there's problems for longs. Okay, so some pretty critical areas here. Actually, I'd like to see gold trade down one more time, and I think there's a shot, because I'm still not convinced this is a bottom in the end. Closing back over 107 could take it to 108. We never got there. Or maybe we just have it fail and get that last drive to 105. But if the yen is going to 108, we should have some more downside in gold. I'm looking at perhaps like the 1280, 90 level to give it a shot. You have to be wrong under 1240. But this is starting to look like some type of either distribution top, or maybe we can get something like this, and it's really a continuation formation. I think this high eventually will be taken out. It was a confirmed high. Maybe we're going to get something like this, some kind of wedge pattern. So we'll look at that as being a possibility. And you know, Gann did teach that at the at the change of seasons, we could look for reversal points. Okay, so I'm thinking that's a possibility, and the reason being the dollar. You know, if we get a big move in the dollar after the Fed, it's very possible that we get up to this confluence here. And actually, I started to notice that when the dollar came back, the market recovered, and that's a little different. I want to talk to Blake about it, But we had a weak dollar with the market selling off, and until the dollar started coming back late in the day, they were just crushing indexes. So I would love to see a rally. I'd like to see either of these two scenarios. I don't know which is going to happen first, but if we rally up to a little over 91 to 91.35 or 40 back towards these, old support zones right here, you could draw a horizontal there. Or if we're going to flush one more time and the euro make one more high, it's underperforming again today against cable. Down here, I'd be looking for dollar buys. But right here with the Fed, the waiting's the hardest part. So, I'm going to just sit on my hands. And if you want to trade, I'd still be, you could trade into the Fed, but I really would pare down positions into the statement. I guarantee you that the markets will be here after Powell's statement. I'm not sure if there's a press conference, but make sure your equity is. That's my mentoring today. That, don't be afraid of missing anything into the Fed. I tell a story that when I was at FX Street, a guy in LAR, Skyped me and said, Dale, I bought the euro before the NFP. It was a weak number, and the euro rallied 120 pips. And I said, good guess. So with that being said, I'm interested in hearing the team. So when I'm in neutral, there's always something I glean from the analysis between now and the top of the hour. And to celebrate the pound's big surge yesterday, we have Lydia Idem Finkley at Faith Might with us today, all things cable. So if you're a pound trader and a pound cross trader, you're going to want to hear and see Lydia's chart, see what she's thinking after all the strength that we've had in cable recently. So with that being said, I'm passing the baton over to Blake, and I'm sure he's recovered a little bit from his Disneyland adventure. So Blake, if you're with us, how are you going to play the Fed? I know you'll probably trade 100 times before the announcement.
Hey Dale, how's it going?
Hey,
good morning.
Good morning.
I do expect today to be a really, my allergies might act up. Excuse me. I was thinking today might be a very, very slow day, but we've seen a lot of dollar strength come in the market, and whether it's position squaring or what have you, ahead of the FOMC, it's probably what it is at the moment. But let me see here. I'm going to go ahead and grab the screen. So I was looking for the euro dollar to come down to these levels. We're just below the 618 retracement right now in the euro dollar. I would not want to be on the short side. I actually picked up a little euro down here, just looking for a bounce. But I'm doing it more of just to play these ranges. I don't think that you want to get too aggressive ahead of the Fed. It is, you're right. It is Jerome Powell's first meeting, and everybody's expecting a rate hike, so it's all baked in. Now will he spin more of a dovish tone because of possible turmoil that we have right now? I don't know, and even though he's going to hike, will he be a little bit more cautious? I think that is the risk. That is a risk, not the risk. That is a risk. So, but I think that squaring is going to be key here. And if you look at the dollar index, we're getting a nice little rally. We've had a nice rally in European trade. I don't know how much more dollar strength we're going to get today. I would be very much inclined to see to see something that looks like this today. So we might actually hit a new high in the euro, or in the euro and the dollar index, where we hit a new high, the euro slumps maybe to the 50s or 60s, and then we go, oh my God, the euro is coming unglued and the dollar is going to rally, and then and it just slips after that. I wouldn't expect too much at this point in time, but we are seeing some dollar strength come through the market right now. What's interesting is equities are moving higher too, and in recent weeks we've seen the dollar move opposite of risk. So if risk bounces, the dollar sells off, and vice versa. But that's not the case today. And I think again, this has
that started late yesterday, Blake. I was going to ask you because I noticed that there was no safe haven buying in the dollar while the market was getting creamed, and until the dollar started coming back a little bit, then the S&P's at least recovered a little bit. Like, I'm reading more and more about the move away from not just the dollar but dollar assets. So maybe we're moving into a regime where when the dollar is weak, it's risk off instead of it being risk on, and that'll fool some people for a long time because it's so ingrained the other way.
Yeah, and again, I wouldn't read too far into it, Dale. I think this is more of a again, it's position squaring ahead of the FOMC. It's not like, oh, I'm gonna, this is the way it's gonna be and moving forward, and this is how I'm gonna be trading the markets moving forward. I think it's more of a, you gotta take what we've got today, and it is what it is. But and I'm not sure what all is going to, like this euro dollar move that we're seeing here. I mean, the euro is basically over the last few hours have slumped about 60 pips. For why? Like, I don't see any particular reason why the euro dollar has just slumped 60 pips. Can it go further? Sure it can, but is there any real reason behind it? And I don't see one. I think it's more of a just like I said, it's just squaring of positions, and it'll probably thin out at some point. Whether we continue lower, towards the 122.50, or if we stop somewhere around here, I'm not too sure. I'm hoping it bounces soon, but that's I'm prepared for moves to extend a little bit further. When it's days like today, or moves like this, you just got to trade small, and knowing that tomorrow's the big day, tomorrow's the big kahuna, and if you can get out making a few pips here and there, or you maybe even losing a few pips here and there, but not making it too aggressive, then that's what it's all about. It's not about, like, this is not a home run day. This is not a day where I'm looking to have the best day of my month. This is a day where I'm just going to chisel around a little bit and hopefully not lose too much. And if I make a little bit of money, that's going to be great. Now, like the pound, has come down based on weak inflation data. So we had weak CPI come out of the cable earlier today. Matter of fact, let me see if I can get the numbers for you. Actually, it was producer prices and consumer prices. So we had CPI come in at 2.7%. The market was looking for 2.8%. So that was a little weaker. The PPI came in at negative 1.1, where the market was looking at negative 0.9%. For input month over month, and output even came in weaker at flat, where the market was looking at 0.1%. So I see why the pound is a little weaker, but the pound is still looking constructive. I mean, we had a really big move yesterday, and the pound's probably going to find some buyers soon, I would assume. And just as the euro dollar is probably going to find some buyers at some point this morning, you just got to let these flows kind of go through, which they're making their way through the market right now as we speak. We're just seeing some, like I said, it's pre-market pre-market or pre-FOMC squaring. Now, a lot of us have been chatting about the U.S. dollar, Japanese yen, and matter of fact, I'm going to take you over to ForexAnalytix. I want to go over to Gregor Horvat, his Elliott wave count for the dollar yen. He's looking for wave 4 to complete around the 106. Probably 106.90, 107 area, which would be triangle resistance. And another guy, Mike, in our chat room, he was looking at the same thing as well. And one point I want to make out with the dollar yen is if we do make it up towards 107, I would be very interested to be a seller up there in the event that we make it up there. The dollar yen, in my opinion, is still very bearish while we trade below this 108 area. This is the sell zone, if you will, of the dollar yen. And if we make it up to 107, we're basically at the underside of that that sell zone. And I think that is where personally I would like to be on the short side of the dollar yen. I'm obviously still bearish. I was reading Citigroup's their roundup this morning, and their trader had made note that as long as we're below 108, it's in breakdown territory, and I 100% agree. This is without a doubt a trade that I would love to be in, is short dollar yen on any move to 107 or so. So now the question is, are we going to get up there? Are we going to make our way up there? And as long as risk appetite can hold on today, I think it's possible. Now, yesterday, let's talk about yesterday for a moment. Yesterday we had a pretty nasty Monday sell-off in the stock market, but we did recover late in the day. So if you look at, like, here's the daily candle of the S&P. I'm gonna zoom in. Okay. Daily candle of the S&P, we sold off pretty aggressively, but we made back almost half of our losses yesterday. And because we came back so aggressively by the end of the day, I think there's a good chance for turnaround Tuesday, which is, obviously today. We can see a nice bounce in risk. Now, the S&P, to me, or the NASDAQ or the Dow, or the markets don't. That we're kind of in what I would call no man's land at this point. It's like, okay, well, I don't want to be on the long side because I don't, other than us stopping at a 38% retracement, which we did on the S&P, I can't really argue being long. But at the same time, because we cracked through this trend line, I don't necessarily want to be short right where we're at. So the S&P probably is going to, or the broad markets are going to be fairly choppy, looking for direction going into tomorrow. So I think going into tomorrow is going to be really important that we kind of figure out what how the market's going to respond to the new Fed chair, which I think everybody is kind of questioning. If the new Fed chair is hawkish, he comes out swinging, and he's more hawkish than the market expects. Does the market take that in stride and say, oh, that is very positive, that the Fed governor is looking past all the near term, maybe political geopolitical outlook of the market, maybe even looks past trade and is still very bullish or hawkish on the U.S. economy? And if so, does the market not like it? Because the market's like, hey, listen, we're going to continue to tighten here, and in the face of a lot of uncertainty. Or does the market go, you know what, that's great, he's hawkish, and no matter what, he still sees a very strong economy, and people start buying stocks. We don't know that, and we don't know what the market's reaction is going to be until tomorrow. So I think trying to gauge what you're going to do with risk appetite at this point in time is going to be very challenging, and therefore trying to gauge what you want to do with the dollar in particular is going to be really challenging. That's why I think that if we have any extreme move, whether it's dollar strength. We see dollar strength come in, nice, hot and heavy today, and we see us rallying the new highs in the dollar index right here. I think you got to sell it. Or if the dollar gets really weak and we start breaking through these lows here, you probably want to fade that. So if you're looking at, this is just the dollar index and this is a 4-hour chart, the way I would approach it is, you sell up here, or if it gets down here, you buy down here. And then because I think when we get into tomorrow, we're going to be right. See where the range is here. And people that have been listening into these webinars for the last, well, at least the ones that I've been doing for the last 10, 12, 15 years, know exactly what I'm going to say right now, which is good. And Dale, you may not, you may have heard this from me before. When there's a big event, which tomorrow is going to be a big event. Why is it big? Because it's Jerome Powell's first, first meeting. Whenever there's a big event, the market tends to go mid-range. So if I can identify the range ahead of time, which in the dollar index, this is, to me, it's pretty clear. I mean, we got, 91 here, we have 88.50 here. We're mid-range at the moment, and then you take the smaller range that we're in is right here. We're probably going to end up right around 90 tomorrow. So if we get too far away from 90, like 90.50, or we get down to 89.50, you want to fade these moves, because ultimately tomorrow, ahead of the Fed, we're probably going to be right here. So, and it'll be interesting to see where we're at 24 hours from now when I'm speaking to you again on Wednesday morning ahead of the FOMC. I venture to guess that we're going to be somewhere around 90. So that's why I'm trying to explain to you guys, don't get too excited about the dollar rally that we're seeing currently at this moment in time. I don't know if it's going to last. I mean, it may last for the next couple hours, but I don't know if it's going to last, too much ahead of the Fed, because no one wants to be too aggressive ahead of tomorrow. No matter, there's a very high probability, I would say, 90%. If I had to guess, if I had to throw a number at it, 90% chance that we're gonna just be range bound, going into tomorrow's big event of the week. So anyway, that's what I'm thinking here. And what else is interesting is you've got the Aussie dollar that is very weak, but in this recent dollar strength that we just saw, the Aussie didn't do anything. It didn't go down, and I'm surprised. Now I have heard that there's a huge expiry today in the Aussie dollar at 77.10. Like, I don't know what the amount is, but I know it's very sizable. So with that being said, maybe that's what's containing the Aussie at the moment. The Kiwi dollar has come down a little bit, but we're approaching very key support, which we talked about yesterday. The dollar Canadian, I am still short the dollar Canadian. I want to be short the dollar Canadian as long as we're below here. Now let's talk about this for a little bit, because I do have a pattern in play on it. So let's discuss this, because I've traded the dollar Canadian on the short side a bunch yesterday. I actually had a really good day yesterday. Coming back from Disney, I didn't think I was going to have as good of a day as I did yesterday, but let's talk about this for a moment. Where we're currently at. Okay, so if you look at the longer term dollar Canadian, and let's just go to the daily chart, okay? You take the high from May of 2017 to the low, which was in September of 2017. Then you take it to where we're currently at. We're at a 618 retracement, or we were yesterday in European trade at 131.30. So we hit a 618 retracement of this entire move, okay? Also, let's go to a 4-hour chart. We hit 161% extension, you can see it here, of this last down move, 161% extension, and then 127% extension, which I don't have written up here. I don't know why. I don't know where it went, but let's draw it again. You take the high from 130, right, or 129, wherever we're at, to the low here. Okay. We're also at 127% extension. So we have a triple confluence. You can see triple confluence right here. Triple confluence of major fibs around the 130, 130. So as you can imagine, for me, I want to be short while we trade below that, and I did tweet that yesterday. So while we're trading below this, 130, 130 level, I want to be on the short side. So I'm maintaining a core position short the US dollar Canadian, and I'll probably continue to stay short going into the FOMC. What I'm hoping is going to happen is the US dollar Canadian, slips towards, 130.50, maybe, it'd be even better if we got all the way down to 130. I hope we slip a little further going in the FOMC, but I want to be on the short side as long as we trade below that 131.25. And like I said, I'm trying to maintain a core position going into tomorrow. We'll see how it performs over the course of the next couple of days, but that's over the next 24 hours. Obviously, if we go into FOMC and we're trading above 131, I probably won't be short the US dollar Canadian. I'll probably stand aside. But if we can make it all the way down to 130 or 130.50, I'll keep a core short position of the US dollar Canadian. That's what I'm thinking with that. Let's see, Swissy. Ooh, look at the Swissy popping into these trend highs. Wow, look at the Swissy. Bonds are coming off. Okay, yields are rallying. That's what's got the dollar going right now. I mean, let's take a look at the bond market. Oops, look at yields. Yields are ripping. So yields are flying right now as bonds are selling off. Man, that's what's got the dollar moving right now. It's all the bond market at this moment. Now, again, is it position squaring ahead of the FOMC? I would venture to guess so. Now, let's stop for a moment. Let's talk about the Swissy, since this one's really moving at the moment. This is a very loose trend line that I've had drawn up here, and actually I probably could be a little bit more. I mean, we're tagging pretty good resistance at the moment right here. If I had any well, how should I say this? If I could stomach that, this is probably a decent short up here as hourly relative strength gets towards overbought, but I'm not going to do that. The Swissy's been off my radar for a long time, but I tell you, I don't think I'd want to be long right now. I think if I was long, I'd be taking profits.
There's a little three driver right there, Blake. But I have a feeling it wants to throw over that, but it's a good level. You see those three drives right there? 1, 2, 3, pretty tight to it. Yeah. No,
here?
You're right. No. There. 1. That's 1. That's 2. And here we are for a 3. Possibly.
For a 3.
Yeah.
Well, okay. So with that being said, okay, I wanted to see where that 618 was. That has nothing to do with where we're at right now. Actually, let me get rid of that. Okay. And matter of fact, let's take this high here, right here. We're kind of in between fibs. Yeah, the 50% retracement comes in just around 96 cents.
Yeah, it looks like we could have a throw over where, what I teach is let it blow through that line first, and then next time back inside you got a failure. But we could have a throw over, into the Fed. But,
yeah, I mean, look at the dollar now. I mean, the dollar is, definitely definitely been strong this morning. Interesting. Thanks, Dale. See a little guys get a little coaching from Coach, just like that.
Glad to serve.
All right. Let me see. Dollar yen. Let's look at the dollar yen. Oh, we talked a little bit about this, but the dollar yen. Yeah, I'm hoping we can make it up to 107. That'd be spectacular if we could. I'd be really happy about that if we can. Oh, we just had Canadian data come out. We had Canadian wholesale sales came in a little stronger than expected, so the dollar Canadian's coming off just a little bit here, but nothing too exciting. And that was really we have New Zealand dairy prices coming out today, and that's pretty much it. And with that being said, I guess Steve is probably here. Good morning, Steve.
Hey Blake, what's up?
Hey,
Blake?
how you doing this morning?
I'm good. How have you been?
Good. Just actually, I slept in all the way to my alarm. Then I'm still playing catch up from Disney. So.
Feet still hurting?
No, my feet actually feel okay this morning. I got out of bed and I didn't hobble, so that was good.
As long as your nose isn't growing, you're okay, buddy.
Yeah, no Pinocchio here. You know what was really sad is we were, as we were going through Disneyland, my kids don't even know like half of these characters, and that's probably a failure on my part. I'm like, we're gonna have to go watch Lilo and Stitch and my son,
Some of the old school cartoons.
My youngest son, he wasn't feeling too good yesterday, so last night we watched the Cars movie. See, I'm trying to catch these kids up on, even though he's way older, and it's not really his thing, but we still watched it anyway. So, anyway, well, again, I think it's ahead of the Fed, some consolidation here, a little bit of back and forth. I'm not really too excited about anything at the moment, but just kind of waiting for something to happen. Just meddling around a little bit. So, Steve, I hope you have some better ideas. I know we saw some pretty decent moves in some of the cross rates, like the Euro Aussies come off its recent rally, and so those might be better pairs to talk about today. Some of these cross rates.
Yeah, absolutely. We had a look at them yesterday as well. As you very well said, I think the vast majority of the tickers we monitor should probably end up like consolidating for the next, like, what is it, a little bit less than 30 hours.
Yeah.
Some positions squaring, as you very well said. So we don't have any real data that can be driving the market up to the Fed's decision. So I think, it's more about talking about, potential opportunities after the Fed than anything else, right?
Right. So hopefully we'll have some good setups for tomorrow, and I know I'll be here tomorrow morning preparing you ahead of the Fed. So you guys have a great 30 minutes, and Dale, have a great interview with Lydia.
Lydia, yeah.
Thank you, Blake. Good
Thank you, Blake. Have a nice day, mate.
You too. Bye-bye.
Hello, notes, Revolgi.
Hey,
How are you,
how have
buddy?
you been?
Good.
Steve.
So what are you thinking
I'm
here?
good. How are you? Yes,
Good.
Hi,
Oh,
sorry.
Scott.
Hi, guys. Morning,
Hey,
everybody. I just
Scott.
wanted to add something before Steve starts talking about the crosses and everything. Like Blake said, we had the UK CPI, which came in weaker than expected. The interesting thing is that the pound hasn't really gone down a lot since the numbers, and I think the main reason for that is that the market's probably looking at the silver lining of these numbers, which is the fact that the squeeze on the consumers is narrowing. So the gap between inflation and wage growth is narrowing. And if we recall, this is something that the Bank of England actually themselves have been pointing out in the past as being a problem. When wage growth was at 2.3% and inflation was at 3%, that was a big squeeze on the consumer. Now we've got 2.7% CPI, and tomorrow wage growth is expected to be at 2.6. So that's almost flat now. That's something that we know the Bank of England is looking at. So, if somebody's looking at the good part of these numbers, so to speak, that's it. So that maybe is a reason why the sterling isn't suffering much.
And to be honest, sterling isn't suffering at all, given that just by having a look at the board, we can see that the dollar is catching a bid across the board. It's not, a specific sterling weakness that we're seeing today. So, considering that the cable, for example, is 0.11% down today, while the Euro USD, which we had no negative data or whatever, for today is 0.41. So I don't, or the Aussie is as much down, or the Kiwi is more. So I don't think we in essence have any sterling weakness in comparative basis, of course, right?
Yes.
And the whole thing is, guys, the whole thing is such a delusion that wages are catching up. Let me just tell you a story. Went grocery shopping, guy checking me out said, "Oh, anytime you get out of here spending less than $100 is a good day." He's been there 10 years, and he said food prices at almost everything he looks at is up 90%, while wages are up 10.
Yeah.
So, I mean, people are really feeling squeezed on everything.
That's the magic of the calculation, right? They put more on consumer electronics than food and energy and education and health. We've said
we're not conspiracy theorists. It's as simple as that. The CPI calculation is one of the most distorted and manipulated things that are happening out there, simply because it's in the best interest of governments for the CPI to be giving a totally different story than the reality it does.
And what people's lives are, what they're experiencing in their life.
Yeah, exactly.
Absolutely.
I mean, we were everything, the media, the central bankers, etc., were trying to persuade us that there is a strong fear and danger of deflation. But when was the last time humanity saw deflation, right? So, I mean, obviously, from an economic standpoint, deflation has, strongly negative consequences in an economy simply because it takes away incentive to invest.
The fear of deflation is only in financial assets because that's the whole wealth effect. That was the whole game. That was the whole game the last 8 years.
Exactly.
And Steve, the fear is not deflation itself. You get minus 0.5% in CPI or something like that. It's nothing. It's the spiral deflation that they're fearing, which will, with money supply and credit supply increasing at these phenomenal levels every year in most Western economies, this will never happen. Or at least I don't think it will ever happen. But yeah, it's like deflation is the boogeyman that everybody's so scared of. And like you said, it's very difficult for this to happen. Very difficult, I think.
Yeah, and as I said, I think that the whole CPI thing is a charade. I mean, it's a joke, because everybody that has been living out there know that in essence it's not that we had extremely subdued inflation for so many years. I mean, who can claim that prices have been more or less flat since the 2008 financial crisis? Really, I mean, within 10 years, I see big differences. Imagine, and theoretically speaking, we have had like periods that inflation was, almost null, and obviously that's not the case, right?
Yeah.
Anyhow, back to our lovely charts, because they don't lie either.
One last thing, because of these economic conditions, I'm no longer going to use less leverage. Everyone has to use more leverage just to keep up with what's going on out there. Use max leverage is my new theme song. Use max leverage. Okay, guys.
and blow up your account.
Then you can't even buy $100 worth of groceries. Yeah, you're right. Okay.
Exactly. Okay, so back to our lovely charts. First of all, I have to say that we haven't had many things that, have been real movers, today, but crude is one exception here. And if you remember, we were talking about it yesterday, that, the chances have increased that crude has actually chosen the path of pushing higher from there and not once more lower. Today, more or less, provides even, even further confirmation that that might be the case. This formation looked to me simply a consolidation after the first move higher. So I think that the chances are increasing that crude might want to, press to new highs directly from here. Definitely, the line in the sand is now the 60 area, which is this consolidation low. I think that as long as we stay above 60, it's probably good bet that crude, will move straight higher from there, perhaps to new highs. So I think that crude is making good effort there. Now, of course, you can connect or not to USD CAD. I'm still short from Friday, a little bit in the money. We're definitely getting a first reaction from the area we were looking for. Blake already showed it, like a confluence of at least 3 resistances over there. I have to say, though, that I want to see, and I don't expect to see that within the next 24 hours prior to the Fed, obviously. But, I would feel good if I see an acceleration lower, because if we simply end up having a few days like the one we had yesterday, which produced a spinning top, it's just going to give me a signal that, okay, yeah, that confluence of resistances did hold price action, for a little bit, but other than that, it's just a consolidation and nothing more than that. So I'll probably get rid of my position and look to re-enter higher. But ahead of tomorrow, anything can happen. I'll be glad to be holding it. I only have 1/3 of a position for the time being, and if I see like a strong move lower, I might add up to it. It depends, because the first area of support actually is previous area of resistance. It's roughly at 130. If we break below there, then we open 128 for a retest. I think that actually if we break below this ascending channel support, we will get down to 128, even if that proves to be just another corrective move before another push to the upside towards 133, which is a probability, okay? We also have some RSI divergence here, you can see it. So I think that for the time being, this setup looks quite appealing. Now, having to do with Aussie and the Kiwi, Blake just briefly mentioned them. I have to say that the fact that the Aussie has broken below 77.40 is definitely a bearish development. I'm not expecting to see much of a follow through, because we already had 2 very strong days lower. I don't expect to see much follow through ahead of the Fed tomorrow. Yesterday we had a pin bar. Today, so far, we have another pin bar, an inside pin bar. So we might see another 24 hours of the pair consolidating its recent losses, and obviously what's going to happen from there, will depend on the general dollar move. One thing is for sure, that the Kiwi is still pressing lower. It's about to make it to this very important area of support. Call it 71.80 roughly, give or take like 10 pips. As you see, it's a previous double bottom. It's the 38.2 from the last move higher that we find there. It's the 200 daily moving average, which is also there. So, and even if we change the chart down to a line chart, and I have a reason to be doing this. So if we change the chart to a line chart, you can see here, actually I'm not going to permanently draw it, I'm going to do it like this. You can see here that, this can also be a head and shoulders formation, right? This was the closing high, while if you go to a bar chart, we had a wick that actually pushed higher. But if you go to a line chart, which only takes into account the closes, you can see that this also has the characteristics of a head and shoulders formation, right? So keep in mind that a break below this area here, any way you slice it, any way you look at it, you want to see it like a range that actually broke to the downside. You want to see it as a head and shoulders formation. You want to see it simply as breaking through major confluence of supports. Any way you see it, it will have a very good potential of producing some follow through, right? And that's something you have to take into account. I think this is one of the most interesting setups out there at the moment. So the Kiwi, in quite an interesting position at the moment. Let me see what else. Yeah, Blake also briefly mentioned risk yesterday in stocks. We obviously had quite a strong down day. At the end of the day, we pared back some of the losses. Nothing really much changed yesterday, other than the fact that we tested, and for the time being, we saw indices hold some interesting areas of support. For example, 2690 was a horizontal area of support in the SPX. If we go to the IWM, you can see that the IWM also tested a support resistance area. The 50 daily moving average was also there before paring back some of its losses. IWM also hasn't confirmed a break to new highs. The only index that did that actually was the Nasdaq, and that lasted only for 2 days, and then we dropped back in the range. Dow Jones, we said that a long time ago, is one of the cleanest. It produced a very obvious triangle. Now, I was also monitoring this trend line as a trend line of secondary importance, because you can redraw the triangle in a different kind of manner. One thing is for sure, that as long as this resistance trend line is holding, at the very least, you should expect more consolidation, if not a resumption to the downside for at least one more leg lower, which looks likely, right? Like an ABC, something like this. So we still don't have confirmation. Logic says that with the Fed out of the way tomorrow, and with whatever decision the market takes about how to interpret whatever Powell is going to give us, obviously the dollar is going to respond one way or another, and obviously risk takers are going to have to take a decision if they like or they don't like what they hear from Powell. So
Steve, there's no press conference, is there? Just a statement, right?
I think tomorrow, yes. Stelio, that's the case, right?
No press conference.
As far as I know, yes.
Okay. Yeah. Thank you, guys.
So the market is obviously going to take some kind of a decision of how they want to interpret. She says there is a pressure.
Really?
Oh. Yeah, Scott says the same.
Okay. Then we are mistaken. Wow, I thought there wasn't.
Okay, regardless,
that's going to be the mover, if true, if Scott's right.
We said that since last week, that the mover is anyhow going to be the rhetoric. There is no question. The market is pricing in a rate hike. There is absolutely no way that the Fed isn't hiking. So it's all going to be about forward guidance, in essence, right?
Want to hear an oxymoron? I'm looking for a dovish hike.
No, it's not so much of an oxymoron, actually. If you think about it, Dale, post the previous financial crisis, the vast majority of the hikes, if not all of the hikes we've seen globally, in essence, are dovish hikes, right? Because nobody wants to signal that, yeah, sure, we started the hiking cycle and we're comfortable with that, and everything is going to be fine, simply because they would find immediately that their currency would appreciate rapidly, given the fact that nobody else is willing to do that. Personally, I'm trying to remember a hike that we've seen during the past 10 years that hasn't been a dovish hike, and one doesn't come to mind now. Perhaps I'm forgetting something, but one doesn't come to mind. They're always like, whenever they're hiking, they're like, whatever we do from here is going to be purely data dependent, and we're monitoring that, and we're always ready to be more accommodative if things turn around and things don't resume in the right path, etc., etc. So this is what they've all been doing. So the question is not if it's going to be in quotes a dovish hike, is how much of a dovish hike is going to be. So for example, if there is not much dovish rhetoric, I think that the market is going to interpret that rather as hawkish. Especially, I mean, the best hawkish result somebody can expect is the absence of dovish language. The absence of dovish language is the most hawkish thing somebody can expect. I don't think you can expect anything more hawkish than that. So if dovish talk is minimized or absent, that's going to be quite hawkish. So that's what I think.
Let me answer John Woo's question. Blake brought up an expiration for the Aussie today, and where there was huge open interest. So John, the big players are the sellers of options, the writers. So their goal is to get the market to be as close to a big strike so they could collect premium on both sides. So that's how people use options to trade FX.
So in essence,
go ahead.
near expiration, you might see a rate or any instrument get pinned more or less at the price of a big expiration. That's something that you can see happening in the markets multiple times. So monitoring at expiration or very close to expiration, where the big positions are, can be especially in days like today, that anyhow the market doesn't have much of an incentive moving ahead of big news. It can be quite indicative of what's going to happen and where the price is going to close.
Yeah, because Steve, that options are like most Forex services. 90% of them are worthless.
I thought you were going to use the relationship analogy, which is quite good actually.
That way I could plug us because we're in the 10%. All right.
Okay, so now having to do with, I wanted us to have a look at a few more indices. One of them is the DAX. I said it last week as well. As long as this descending trend line is holding, I think that the DAX has the potential of pushing lower once again. So I would still be quite careful. The DAX, we had a very nice day there, and that gave me much confidence that a rebound would follow. A rebound did follow, but the fact that this rebound not only has stalled, but seems to have lost completely momentum without us even having registered a higher high, tells me that the buyers are running out of fuel once again. So I think that the index remains vulnerable for at least one more push to the downside. Now, the FTSE has already done that. I was monitoring this as a triangle, and it seems that we've already broken below it. So the FTSE even looks even better for another push to the downside, right? And as you see here, there is quite a big pocket of air. I mean, obviously we have the previous low at 69.80, but below that, if we break it, I think we go quite lower. I mean, above 6,600. So it's the potential. We have the potential for quite quite a move to follow from here. Okay, let's have a look at a few more things. I'm not going to go over the USD yen. Blake already showed it a couple of times, but let's have a look at the crosses and how they're behaving following, the last moves we saw. First of all, let's have a look at the EuroCAD. We've had plenty of conversations about this. Quite a negative day today so far. Momentum had already started, like dropping the past few days. We also have some very, very clear RSI divergence here. We had an overthrow from this internal trend line. As I had said several days ago, I think you should be careful here. Obviously, EuroCAD remains bullish, but I think that in order for anybody to be interested in buying here, you should wait for some kind of a move lower so the overbought conditions can be addressed and price coming down a little bit towards, if we assume that this was a very short-term high, I would guess that at least come down to the 38.2. Obviously, as long as this ascending trend line here is holding, we remain bullish. But as I said, any move lower, I think is going to be a good opportunity. But buying up here makes no sense from a reward to risk perspective. So ideally, even if we could get all the way down there and test this high here and come close to the ascending trend line, that would be ideal. I doubt that it's going to come down to that. Perhaps it will come down to retest these highs there and 38.2 before rebounding higher. But definitely buying up here makes no sense, right? So a pullback is something that you should hope for. It would be a healthy development for the market, and that's all I have to say about this. Now, having a look at the Euro Aussie and the Euro Kiwi, we said it yesterday as well. They obviously remain bullish, but the momentum is not as good as the one we see in the pound crosses. The Euro Aussie is getting rejected for now from the 141.4. I think that eventually it's going to make it up to the 161.8 of the last corrective move lower. This inverted head and shoulders gave us accurately a good signal about the pair finding once again a bottom. And as I said, I think the 161.8, we said it since breaking to new highs is going to be ultimately the target. Now the Euro Kiwi, obviously among the Euro and pound crosses, it remains one of the weakest. It has one thing going for it. It's still barely holding this ascending channel, but on the other hand, the other crosses are like pushing to new highs. And if you look at it, the Euro Kiwi is finding extreme difficulty, even bypassing the support resistance area, which is quite below the recent highs. So I would be rather careful here. It looks like to me that, and as you see, RSI is also failing in pushing high. So obviously between all the crosses, one of the weakest ones, and I would be very careful if we actually broke below this channel. It's the most vulnerable of all the crosses for a pullback. And you know how it is. You want to be long the strong one, you want to be short the weak one in case you want to be short any of them. Now, let's go to the pound crosses. Let me begin by having a look at the pound CAD. Pound CAD tested the 50% fib today from this whole move lower. As you see, it has already pushed aggressively higher, and the same thing applies here. We said it several days ago that yeah, it can move higher from there, but where would you have your risk set? So in essence, this is one more pair that what you want to see is a healthy pullback with some corrective characteristics, so you can feel more comfortable in buying. Because buying up here or even buying several days ago, was something that you could claim that you were following the trend, and that would have been correct. But on the other hand, as I said, you wouldn't be able to determine an appealing reward to risk ratio. So it made no sense, right? So it's one of the pairs that you have to wait for a pullback before getting interested. Now, where could that pullback be? Depends on if we push higher from here or not. Because if we push a little bit higher, perhaps a pullback down to this support resistance area might prove to be enough. Now, if we don't, then we might pull further back, perhaps to test these highs there, or even down to this area and this ascending trend line before actually moving higher. Even if we clone this ascending trend line, you're going to see that we even had a little overthrow here. So, this is something I'm monitoring, not about to take any action. The only cross I have exposure to is the pound kiwi. So let's have a look at both the pound Aussie and the pound kiwi. We said that both of them obviously gave us a signal that the move higher is resuming. This one produced a triangle. We broke above the triangle. We're pushing higher. We're finding some resistance at the 127.2 of this move lower, quite healthy. I think any pullback perhaps to test this previous double top at 180, it's going to be an excellent opportunity. And let's have a look at the pound kiwi. Here it is. We said, several days ago that the pound kiwi was consolidating between two major trend lines. One of them was the trend line of this, you can call it a bottoming formation, regardless, it was like a large triangle. We falsely broke below it for a single day, so I'm not taking that into account. And then while we were consolidating, it was obvious that there was another trend line that was in play. It was this descending trend line that was capping price action. So we broke above this one as well, and now we're finding resistance in an area we had already noted as a supply-demand zone, which was this one. Roughly call it between 194, 194.50. So it remains to be seen if we will be able to slice above it, like right here, right now, or we're actually going to see some type of a pullback from here and then move higher. Regardless, I think that the break above this trend line for the pound kiwi and above this triangle for the pound Aussie, are bullish developments. So this is exactly how I view it, and I'm looking for opportunities to gain more exposure in the pound cross for now. Kiwi, I have to say the Kiwi crosses look extremely appealing if the Kiwi dollar actually manages to make the big move and break this horizontal support area that we showed before. So I will be very, very interested in gaining some exposure there if we see this move. Dale, is it the time for an interview? Have I lost time?
Yeah, but it's okay. Go ahead, because Lydia is not in the house yet. She's having some trouble getting in for some reason. Yeah,
Okay. So we have a question. I just saw that we have a question about the Aussie Kiwi, which actually produced a little bit of a rebound today because we've seen quite a strong move from the Kiwi. Regardless, we are still in a sequence of lower highs since we found a high at almost 113. So 1 day is definitely not enough for me to be looking higher. I think that the Aussie Kiwi for now should still be considered bearish. And the next real area of support is anywhere between 1052 and 1057, roughly that area. I think we can easily see a push down there. Now,
okay. anytime
here?
you're ready to wrap it. Yeah, anytime. you're ready.
Absolutely, absolutely. Go ahead. Go ahead.
No, go ahead. Finish your thought on this.
No, I had already finished. I think that it remains bearish for now, and you know, I would like to see a lot more than a single day of you know, a recovery like we're seeing today to be convinced that this move lower is done and over with, right? That's
Great
it. So until I see that, you know, I remain bearish.
Okay, you could follow Steve the rest of the day in the members chat room. Blake's in there too, so sign up and then face won't end for you. You'll have access to, you know, not just the team, but a bunch of great traders in there sharing ideas, supporting each other. And with that being said, thank you, Steve, Stell, Blake. I'm going to pass you the ball, Lydia, and great time to have you. We've had some two-way news in cable in the last 48 hours, and looking forward to talking all things cable with you. You now have control of our television sets.
Good morning.
Hi, Lydia. Thank you
Hey,
for coming
Dale.
in today.
Yeah,
How are you?
I'm great.
Wow,
How are you?
Good. Nice looking page there on that.
Thank you.
Okay, so great time to have you. I mean, we had, if you want to start there with that page, that's fine. But yesterday, pound exploded. Today, it's given some of it back. We have Powell, his first meeting, and I believe he's having a press conference. What are you looking at going into the Fed? And do you tell your people and yourself personally, you just kind of don't do anything and wait for the Fed to get out of the way because the market will still be there and you want to hold on to your equity until then?
Well, actually, what I tell my students and my clients is that we are aware of news events, but we don't allow the news not to trade our setups. So
Okay.
I'll still get in the setup anyway. So I'm looking at this pound. So I'm looking at this pound dollar now. We're looking at this pound dollar now. And this is the explosion that happened yesterday, essentially. Right. And this is a retracement now of that move. And without thinking of what's coming up next, this is a great move if you believe that the pound is still bearish. I'm sorry, still bullish. Still bullish. Yeah. Great setup. We're right here into the 50% Fibonacci level. That's one of my favorite setups and one of my favorite retracement levels. But if we take just a look out on this weekly chart, we're not going to see this. Let's see. I'll take this off for now. I still think that that cable is still bullish. You know, besides the break of the 61.8 referendum move to the downside from a couple of years back now, that last drive into 137 that we've had now, I guess 3 weeks ago, beginning of March or right at the end of February, holds this 61.8 line. Fooled enough, I think fooled enough people to start to go short, especially as we were getting lower lows and lower highs. And now we get this drive higher. And I needed to see this week that we made a new high. So after this series of lower highs, yesterday gave us our first new high out of this consolidation. And I don't know if you guys call this a flat wedge.
Good eye.
This is our first new high, right? So yeah. I'm of the mind that the pound is still bullish and that we could see we will still see this thing continue to move higher. And if I could move back to the weekly chart, you know, I'm liking an extension into 145. Very long-term play. Obviously, we need to get above 140. We need to close a week. Couple weeks would be nice above 140 to see that trend really starts to move in that direction or resume. We want to see that the trend resumes. But right now, I'm looking at this. This is a nice setup. If we continue to move lower, which is quite possible on some dollar strength, we could see that move higher, move lower, and then you want to, you know, kind of take a look at the entire move. You might want to look at something more like that. But what I like right now is the fundamental situation. So right now the market is really, really not happy with tariff talk and protectionism out of the U.S. And you have to take a look at some of the currencies that have been really affected by any kind of talk towards that. And the dollar has sold off on that kind of news. The yen has strengthened on that kind of news, and the Canadian dollar, we'll take a look at it through the pound, has been dumped on any kind of tariff news. So it hasn't been. I've seen a couple of articles, Financial Times and Bloomberg or Reuters, where it's, you know, everyone's expecting the Asian currencies to take a hit on tariff news, and we really haven't seen that. So just pay attention to what is moving on that kind of news. We have the G20 yesterday and today, and so we'll see what comes out of those meetings. But no, ultimately, I don't think you should let the news dictate your trade. You let your charts dictate your trade. You let your setup dictate your trade.
Okay, so this is a good setup for you. How do you manage risk if you're entering here today?
If you're entering here, you're putting your stop below. For me, I'm putting it below the 61.8, and so we're already moving into there. So this is going to be a tight stop if you take it at all, right? So maybe you don't take this. You're right here now into this, and then you draw the bigger fib. Draw the bigger fib on the whole entire move, and you wait, and you wait. So already right now, I'm sorry. See, we're already right now we're moving. Okay, right here we're at the 50. So you put your stop below the 61.8. That's 39.64. You can see that. And manage your risk on that one. So that's the first setup.
Boy, are you going to have a great video if it turns from here, huh?
Yeah, indeed.
All right.
First from here, if it goes higher, we're gonna see quite a rally.
Okay. So EG, where were you want to go there next?
Yeah, so the pound, let's pull it out to a weekly. So this euro pound has been range bound for months, right? And so if you're, we're playing the range on this one. We've been selling here at the bottom, which is 87.50. We're selling at the top above 89. And that's just been working out well in terms of just playing the range. This one has been range bound. It remains range bound. We'd like to see a break. I favor the downside on a break on a trend break. I think we trend lower. We've gotten lower highs and we're getting pretty much the same bottoms. We got these spike lows that have been lower lows as well, but we have multiple attempts at this level, and I think it's going to crack, especially since, and I'll tell you, I guess it's now 2 weeks ago when we did break finally above and closed above. So this was, again, the end of February where we saw a lot of weakness in the pound, and we broke below, we broke out of this range to the top side and we actually closed above it. And then the next week we fell right back into the range. And so we've been playing this range to the downside. Yesterday on pound strength, we saw it finally hit the bottom of that range. And we got that nice hit right there at the bottom, and we got this retracement right into, and so this is last week's move. If you're wondering why I didn't take the entire move to the downside, I just took last week's move, and we got retracement right into 38.2. And if you followed me or you've heard me speaking with Dale, you know that 38.2 for me is an indication of trend. So right now, we just really added to the position, took some profits at the bottom here, added to the position here, and what we're looking for is a break. And honestly, we can't really get too excited about a break in the pound, in the euro pound, until we close below 87. So don't get. The pound to me likes to fake a lot of people out. I think there's other traders that just think the Forex markets in general like to shake traders out. So you can't get giddy when we get below this range because we've been there before. We've done that before. I think we need to see for this to really trend to the downside, like I'm kind of favoring it to. I don't anticipate it, but I'm favoring it for a downside break. We do need to see it close below 87.
Okay, so if you're flat euro pound right now, would you be waiting for a rally, say back to 88.40 or so?
You
Some
should wait
type of
for
retrace?
yes, you should wait for a rally to 88.80. If you miss this, because you know that's missed and we don't get something like that, you want to see a break that breaks and retests the bottom here and for a continuation to the downside. So these kind of breaks, like, so if we look back in time here, a break like this, like it tested and it came back down. You need to be, you need to be in the markets for this. This is not something where you would trade an order when you're trading a break of a range, and these could be fake out. So this, in my case, would be chasing the trade. You want to catch it up here. So if you're looking at it now, right? We're looking at this now. I wouldn't say get it. To me, you're chasing. You should have got in at 88 yesterday, yesterday afternoon rather. Not this time yesterday, but about maybe 7 hours ago, 8 hours ago. Now I think you're chasing. I'd like to see a break because we could come back into the bottom here and take off again back and just be range bound. We could go back to 89. So on euro strength. So because the dollar is weakening and the euro is going to take off. So don't chase this trade. If anything, you might want to position to, if you're still thinking that this is going to be range bound, you might be getting ready to go long against the bottom of the range. Again, I'm favoring it to the downside, but I'm in this trade to the downside from the top of the range. So full disclosure, I'm obviously bearish, and be looking to take profits if we are waffling again here at the bottom of this range. But euro pound has been range bound for a while, and every time I think we're going to get a break, whether it's been to the top or to the bottom, we've come right back into the range. So, as I tend to say, you just play the range until you don't, until you can't anymore. And this one is still a range trade. I'm happy to see this one continue to the downside on a fib move. And based on the fibs, we'd like to see this make a new low, lower than this yesterday's low. And if you're a trend trader, like most of us are, we want to see it hold below the range here. We want to see it hold below 87, and we want to see this thing crack open. If we can get that kind of move, we're going to see this thing break wide open back to 83, because for us fib traders, it cracks 87. It cracks the 61.8 and signals a reversal back to these lows.
Good luck.
That is what I'm looking for in the euro pound, and hopefully that's a move that gets started this week. If we can get some pound strength staying in the markets.
You have any gut feeling or traders or women's intuition about what Powell's going to say tomorrow?
I think Powell is going to try to talk up the dollar, and I think the market's going to sell off. That's just my feeling. I think that any kind of protectionism talks, historically in the markets just hasn't been good for the dollar. So that's I would imagine he supports that, because that seems to be the Trump trade policy right now, unofficially.
Okay. All right. So maybe Guppy and then against the commodity currencies.
Yes. So if we're looking at the yen here, so the yen just took this. So this is yesterday's rally. Let me see. I'll take that off right now. So that's yesterday's rally, and it actually takes us right into. See, I'm not going to see it daily chart. So it takes us after this breakdown. So I've been one that was a little taken aback by the downside weakness in the yen, or I should just say that the yen strength, pretty much downside the weakness in the pound yen, but been taken aback by the weakness in the strength in the yen overall. And actually after this move that cracked below 147, 148 is the line, but these spike lows from last year when we were first breaking above 148. These spike lows I was paying attention to. So when we got that break below those lows, to me, and we were closing below those lows. To me,
it looked
this
like a breakdown.
Yeah, it looked like a breakout. So this is just a natural. So I guess if I take you guys out to my weekly chart, you can see like we kind of found support in this fib here. But to me, that didn't seem like a bullish move. To me, it was just it was actually the first sign, especially. Sorry, if we go out to this weekly, we kind of stair-stepped our way up in this breakout. And this move here was the first time that we had not respected a fib, if I could draw that, if you draw that out. It was the first time that we had actually cracked a fib, and you had to start to draw out these bigger fibs. So to me, that was an indication that perhaps the trend would be completed. And then we got this second move to the downside after that.
Yeah, you get wiped out about 4 months of an advance in 2 weeks.
Right,
Yeah.
Exactly. That's exactly right. And so to me, that was nothing, even on the weekly chart, you see that fib, there was nothing bullish about that kind of move. And I started, and then there was things in the market going on. The fundamentals have really have shifted quite a bit. If I could take this one there off the weekly, I'm off the daily chart. So yesterday's move, and I saw it above 149 and then going to 149.50 and then going to 149.80. And I started to think I wanted to short it, but I wasn't at my charts yet. So I could not, I'm looking at price action, just purely watching price. And I wasn't looking at charts, and I couldn't get in front of that kind of move because yesterday we didn't know if that kind of move was going to be sustained in the markets, you know, what if it was going to be a, you know, buy the rumor and sell the fact type of situation, which it kind of turned out to be. And we hit right into the 38.2 of these that 2-week drive lower. So to me, it was a great setup to go short. And that was my intuition. I didn't want to take it without getting confirmation from the charts. But that was the short. So right here, we're toying with 149. I'd like to see, I missed it. I mean, I've been in the euro pound full stock. So this is not a move that I took. But this one to me, and we got another, okay, good. We got another drive. So we got a retracement of the rally after, you know, let's say into the Asian session. We got this retracement. I see that we popped higher, I guess, at the European Open, and now we see sellers stepping in again. So, and this was what I would say if we didn't see this pop, you know, 4 hours ago, I would say you want to short above 149.50. You want to short it in position for a move to the downside. I think that we're headed for the 140s if yen strength continues. I think we can see this thing go much lower.
Okay. You might get another chance up there. You have 2 drives, maybe one more.
Maybe you get one more, yeah. And even I'm even positioned for maybe a move into the 50% line, which is much closer to 151. So maybe we get, you know, something that gets bulls. I can see bulls getting excited above 150, and then we, you know, hit the fib line, hit sellers, and continue lower.
Okay, great look.
So commodity dollars, you mentioned CAD. Let's go to the CAD, because the CAD has just been
wow.
The CAD has been dying with a lot of this talk in the market on tariffs in particular. And I have a great article on my blog that speaks to why this is the case. But so I was looking at this with students, and they were seeing some divergence here, and I was letting them know that this divergence is not a bearish indicator. We don't want to short the pound CAD at all. So I was just giving them this look here, and we got some momentum. We got a new high in momentum here. So really, I'd like to see this retrace. This is not a move I've been able to catch because it started off down here. No, I think I started to look at it here at 178. So last week or so, and I just have not been able to catch the pound CAD.
Can't be everywhere.
Yeah, right, exactly. So this is where I've started to see.
It only takes one, Lydia.
And I've been in my mind, honestly.
Lydia, I bring this up all the time. People think they have to be a portfolio trader and have 8 different positions on. I knew guys that never left one trading pit for 25 years, knew one market like the back of their hand, and were multimillionaires.
And that's where you make the money. Yeah. There's another saying, you make your money in concentration, and you preserve your money in diversification. So yeah, if you're looking to make that money, you need to
nice.
You can't be in a whole bunch of different.
All right, I'm going to steal that one.
Your wealth and concentration. Preserve your wealth with diversification. So this is what I've been seeing. Like, this is what I've been looking at. This is the 4-hour chart. Down at 178. It's cleaner in the daily, but when we really look at real-time action, that's what we've been looking at. You know, I'm a fib setups, right? I'm a fib trader, so there's just been no setups. I've been drawing this higher, and I've been drawing it higher. Nothing's coming into the fibs, and so this is where we are. I've not been able to catch this one, but I have been anticipating a breakout to 82 for several weeks now, and that's basically the thing. This thing has been pretty much straight up. With a little bit of consolidation, but nothing that triggered a setup for me. So this is the look that I have. Will it fall into 180, 153? Yes, I do believe that the pound always corrects, no matter how long it keeps going, no matter how long the train keeps moving, it always manages to correct. So I'm just patiently waiting for a correction. And this is the setup that I'm looking for. I'm looking for it to move into 180, 150. I'd love for it to move into below 81. I think any stabs below 81 would be where we see a lot of bids step in. It'd also be a retest of the former highs here that we had been kind of right here at. So that's the look I would look for the pound CAD. I'm very patient with this one. Like you said, it can't be everywhere. There have been other setups in the market. So that's where I've been. I haven't been in this one, but I've kept my eye on it, waiting.
And we all miss trades, Lydia. I mean, every day I miss trades, and that's okay. You know why? Because there's always another.
Exactly. No, absolutely. I'm not losing any sleep over not being in the pound CAD. Let's be clear. I have made money in other in some of the other currency pairs that have just been, they've been set up, are there at the time. This one hasn't been there, so not.
Sometimes don't you key off of other pairs to give you ideas on a pair that you'll trade?
Sure. Yeah.
Okay. Yeah. So another great interview, Lydia. I want people to know how to reach you. You want to show that? Want to show that blog or the first screen you had up there?
Yes. Yes. So I have a blog coming out after we speak. I'll put out something on Facebook, which I think is just interesting considering the Cambridge Analytics and the investigations and all this other stuff. So take a look at Facebook. But yeah, this is my blog. Obviously, follow me on Twitter. Here are my handles are here on these buttons here. But I have classes available. They're one-on-one mentoring classes. My students really get a lot of value out of it. And I'm quoting my students. I'm really flattered and honored and humbled with how much growth that they've had in their trading over the course of 8 months. So you can learn with Lydia's here. Those are some of the courses if you want some more one-on-one. I mean, it's a course. I'm pretty set, but obviously with it being one-on-one, it's at your pace, and I think it's a really good cornerstone bedrock of what your trading can become. And obviously with all of us, I think we all use the same tools, and yet we all still have different trading styles. So I think in this course, you're starting to develop your style, but you still need something that's kind of systematic and something that you can be grounded in. So I'm really happy with the development, with the outcomes of my students. And if you're looking for an investment advisor, you can invest with me as well and become a client. And we talk about how these looks in the markets here. How do I go from a look here into something that translates into your portfolio? So I'm really happy to work with people wherever they are and whatever kind of goals that they have, and really learning these markets. And
do you have an account minimum with your RIA?
I do not have an account minimum because we believe here that we want to be accessible, and those of us who should have professionals tend to be priced out of receiving those services. So no.
Who's the fiduciary? Where are the accounts placed?
The accounts are placed where my clients need them to be placed. So I don't have I'm not with, I'm an independent RIA.
Okay.
And so clients can come to me with their accounts, or we're free to open new accounts with based off your goals and your needs.
Okay. All right, great, Lydia. So may the pips rain down on you this spring. So what a way to start spring with one of my favorite people to interview. Thank you, Lydia.
Thank you so much. Thanks, Dale. Thanks for having me. Thanks, everyone.
You're welcome. Good hunting, Lydia. Good luck into the Fed. And as the flowers bloom, so may your business.
Thank you so much, Dale. Thank you. Thank you, my friend. I appreciate it.
You're very welcome. Okay, everyone, that's it for Turnaround Tuesday. You're welcome, Tom. Lydia's great. And Ed, you're very welcome. We'll see everyone tomorrow. Tomorrow's a big day. Get a good night's sleep and get ready to react to the reaction. Don't predict the reaction. Let's react to the reaction, and the team will prep you for it tomorrow. Adios, everyone, and remember, don't just count your pips, count your blessings. Thank you again, Lydia.